This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, September 18th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Let's do our week in preview. We've had a lot of volatility in the precious metals over the last few months, and let's do a little review. On July 10th, silver was trading as low as $15.28, and we had a $3 rally over the next 2 months, peaking up around $18.30. Gold was all the way down around $12.05, and it rallied all the way up to $13.55. So we had a 10% move in gold and a 20% move in silver. And obviously, we had a lot of excited investors with the opportunity to take some short-term profits. But in the last few days, we've seen a correction take place as gold is pulled back from $13.55 to today's low of $13.06, and silver is pulled back from $18.30 all the way down to $17.10. Now, people are wondering why suddenly, when the market was moving up so quickly, have we gone through this quick corrective phase? Interestingly enough, if you look at the gold market, it's not unusual after the first week of September to see a pullback. Matter of fact, over the last 6 years, we've had classic pullbacks in gold after that first week as the dollar rallies and gold has a tendency to pull back. In the silver market, the pullback may have been predicated on the fact that even though gold was making a new high, silver wasn't able to make a new high, which was creating a bit of bearish divergence. So now, what's next? Well, we have the Fed coming up on Wednesday, and many people were expecting that the Fed may announce the beginning of something called quantitative tightening. What we saw over the last few years is the Fed printed a lot of money, and they bought a lot of government paper and mortgage-backed securities. But now they're actually talking about selling them into the market. Now, what will this cause? Some people believe that this should strengthen the dollar. But the reality is, if the Fed starts to quantitatively tighten and continue to raise rates based on the current economic situation that exists here in the United States, this may actually add speed bumps to the overall market, and we could start to see a pullback in stocks and a potential sell-off in the dollar. Because if you quantitatively tighten, even without raising interest rates, this may force interest rates higher, and potentially if the economy is about to slow down, it may actually quicken the pace at which it will slow. Now, some people believe that this could cause everything to sell off. But if you look at the overall situation, if the US dollar starts to fall and the US economy starts to slow, what will happen is foreign money will look for other places to put their capital than here in the US stock market. And what we may see is a classic situation of sector rotation. We've had a heck of a rally in the Dow, the S&P, and the NASDAQ. And if you think about the current valuations in comparison to historic valuations, they're becoming extraordinarily high. But market value has a tendency to be based on perception. And perception is starting to change. People are a little bit worried about the political situation here in the United States, as our president has effectively not been able to get much done. And what we saw last week was the president actually came out and made a deal with the Democrats to offset the threat of the debt ceiling. Now, this may cause a lot of anxiety in Washington and may continue to cause gridlock, but the bottom line is simple. If we don't see tax cuts, if we don't see a new program as far as medical benefits are concerned, and if we don't see any infrastructure spending, will the overvaluation that currently exists in the stock market start to take hold? And will we see sector rotation into undervalued assets? There's an old saying that the market has a tendency sometimes to throw the babies out with the bathwater. And I believe right now the precious metals may be those babies. And what I mean by that is they may be one of the most undervalued assets that investors could be looking for in this type of situation. Gold may continue to pull back. We look at 1280 as key support. Silver may continue to pull back a little bit. We look at 1680 as key support. The bottom line right now is simple. Gold and silver are somewhat undervalued in comparison to all other assets. We've seen a brief glimpse of what this market could do once it starts to heat up. And that's what happened while the stocks were moving higher. What will happen if we see a correction in the stock market and investors start to move into precious metals? Things could get very exciting. But with everything that's going on, the geopolitical issues, the political issues, the economic issues, now may be one of the greatest times to own precious metals for the long term. And if you want to try to buy low and sell high, the first thing you need to do is buy low, and this correction may be giving you the perfect opportunity. Give us a call today at Monex so we can talk about how precious metals fit in your portfolio. Thank you.